Hello and welcome to the show. My name is David Lincoln. So just wanted to come and check in with you. We are in a really extreme situation with the VIX as far as Contango right now. A lot of decay kicking in and not a whole lot really going on in like the kind of binary scene right now to affect the market. The stimulus, which I was so hopeful that they were going to get something done with, seems to have been put on the back burner now as the two parties turn their attention to other matters. Of course, there's this whole postal thing wrapped up in everything, but also the conventions to officially nominate candidates for president as we approach the election in the United States. Let's take a look quickly at the term structure from VIX Central. And as we pull this up here, we are on the verge of an expiration. You can see that the spot VIX price is very close to the front month future, which makes sense because we are on the verge, as I said, of expiration in just a day. So as we know always happens, the future has converged with the spot VIX. However, you can see what a huge spread there is between September and the spot price right now. When we look on the chart here, we've got the spot price 21.88, September 26, over $4 in a spread there. And you know that has to tighten up one way or another, and it should tighten up pretty quickly. You know, we can show this current Contango percent, 17%. Is high, but the next month just as high. We will be flipping over to the second number in just a day or two when we get expiration, but just massive edge to being short these VIX products right now. And as I said before, we do have a new VIX product that will be coming out pretty soon on the SIBO, and there's a rumor that one of the creators of this product will be appearing on this channel soon, so that's very exciting. We'll see if that rumor does come to fruition. But you know, for a long time I was pretty cautious about being short volatility, and I still am. I still believe that the market is kind of not taking into consideration the exact situation of the U.S. economy right now, and you know, that added to the fact that we haven't gotten that stimulus, and maybe we will still get it at some point. But in the meantime, a lot of people are struggling, and the band-aid that the first stimulus package put on the U.S. economy and really just kind of kicked the can down the road for people, allowed them to pay their current bills, even though they were either unemployed or underemployed, you know, getting less hours, whatnot. That Band-Aid has been torn off to some extent because people stopped getting that extra $600 a week a couple weeks ago. What it was for unemployment for people was that people got their regular unemployment level plus an additional $600 a week, which was a huge help for a lot of people for a long time. But that's gone now, and you know, different states have different levels of unemployment. The state I'm in right now, which is Massachusetts, has a pretty generous unemployment for people. It's one of the highest in the nation. However, these unemployment benefits run out at some point. The first stimulus package gave people an extra number of weeks of unemployment for their state unemployment. So that that bit of money has not run out for many people because the initial unemployment money has not run out yet. So a lot of people are in the situation where like their initial unemployment, which would have been like standard without any of this pandemic or anything, is still going. And then once that runs out, they get that additional amount from the first stimulus. So I guess my point is people are in different levels of what sort of unemployment they're getting, but the stuff slowly starts to run out, and it is going to have effects on the economy and whatnot. And I don't see that having been considered into the market. However, I am less bearish than I was a couple weeks ago, just because it seems like we just haven't gotten that down move, and thus, although I'm not like long a bunch of stocks and stuff, I am considering maybe a small, if we can get some sort of pop in volatility, a small short, because it's so tempting, these levels of Contango, this curve behind me. So the main products for shorting volatility now are still VXX, UVXY, and then of course, if you wanted to, you could actually just trade futures on the actual VIX or options on the actual VIX. But I would recommend for most people, the smartest move would be to trade something like VXX, where you have increased liquidity from UVXY. You don't have to have some sort of special designations for your trading account to trade futures, and you're getting that extra bang for your buck from the rebalancing of these products, the ETPs, as opposed to just trading the futures. Futures, you're still getting decay in the futures, but you're not getting that added benefit of the rebalancing, which happens every day. So we know TVIX is gone. That was the 2 times a leveraged fund. UVXY being the 1.5 times leveraged fund. Now, 1.5 times versus 2 times leverage, it doesn't sound like a big difference, but as far as decay from rebalancing every day, it is a very big difference. So, but the thing with with TVIX leaving was TVIX was not optionable in the first place, so it wasn't a real contender and wasn't a product that was used by many traders who trade long term with short volatility, because you didn't have the optionable aspect of it. And for me, trading VIX products, I use options, as it makes much more sense to me. For one thing, if you wanted to short a TVIX or a UVXY, they are traditionally hard to borrow products. That means it's hard to find shares to short. And if you can find shares to short, sometimes you have to pay an extra interest rate to do that. So options make more sense usually to trade these products. Today, noticing Thinkorswim is down, so I can't really give you a bunch of examples today as far as which options to trade. But if we go back and look at our VIX Central for a second, we can see that what used to be, now if you remember back a couple months ago, what this chart looked like was October was way higher than everything else. Now it's like a situation where I feel like a young kid, in that I keep saying the word like. So I will try to stop doing that. The situation now is that we just have sort of a cliff that this stuff falls off of after October, or before October. So you've got that steep rise up to October, and my thinking is that what would most likely happen is that this whole curve will move lower after the election. And so I don't think it's a bad idea to be short this stuff when the election results come out. However, between now and then, how we play it is going to be, that's where the art of trading comes in. And for me, I would much rather wait to initiate a short until we get at least some sort of pop, at least some sort of down day, or at least volatility pop of some kind. We had some mini pops in the last week, but nothing that substantial. So that's kind of where we are right now for the VIX. I have been pretty careful with stuff because my own personal trading stuff hasn't been going well the last couple weeks. So I've gotten smaller and smaller, and I've kind of been on the sidelines a little bit. But I have powder that's dry, ready to go for a volatility spike, and I plan to put that money to work when we inevitably will get another pop up here in volatility. The curve that we see here does not predict, we always say the curve is not predictive. We do know that the election is coming, and there could be some fireworks between now and then. It's always very difficult to, I know there's this feeling among new traders that you can pick who's going to win the election and then position yourself in a certain way and make money based on that. That usually doesn't work, so I would caution you against that sort of thinking. But there we go. Huge contango right now. I think it's definitely a reasonable trade to either do the bullseye trade, which would be to sell a small amount of at-the-money calls in one of these products and have that both the decay of the calls you sell plus the decay from contango working in your favor, or to have some sort of put spread on shorting volatility. For example, right now, VXX around the $24 range. I was looking at some spreads past the election, like out in November, something like the VXX December 25-21 put spread, something like that, sort of an at-the-money-ish type spread that takes advantage of this contango level and the potential crush in volatility after the election. Remember, we have been in an elevated volatility state for several months now. We have been higher than the average for several months. And usually, the way the average volatility works is we spend most of our time below the average, but then some spikes that go way above the average pull the average up slightly. So for us to stay above 20 in the VIX for as long as we have is quite remarkable, and I really don't see that continuing forever. So at some point, volatility is going to come crashing in, and right after the election would be a good time for that to happen. So we have some time before the election, but I would think about what kind of strategies you want to pursue yourself coming into the elections in the United States in the middle of November. I want to say hi to everybody online. What's up, Spencer? What's up, Eric? What's up, Manfred? Anti-God, thanks for all your comments. And I guess Eric probably left already. So we'll see what happens. Great to have you guys come and check it out. And I will see you later in the week with more once we get our Thinkorswim back up. Now, if your Thinkorswim is not working, you can go to the web edition of Thinkorswim. I did sign on to that this morning. It's just under trade.thinkorswim.com, and that will work for you. It's not the same, though, as the normal program. So I don't feel as comfortable trading with that program, but at least you can get on, check your stocks, make a trade or two if you've got something in the hopper that you need to take care of right away. So check out that online version of Thinkorswim if your normal Thinkorswim is not working today. All right, so signing off from Cape Cod, Massachusetts, and I will see you later in the week as we start to ramp up our programming for as we're going to come into the fall busy market period. Anti-God, I don't have a regular schedule, but I like to try to come on before 9 most days, and Sundays if I can at 6 o'clock when the futures reopen. Thanks for watching, and we'll see you next time on the Short Vol Show Live. You're watching Famous Dave.